I think one of the standout features of the South African market is if you look at world competitiveness reports and similar material, it's evident from that South Africa has a very sophisticated financial system. We rank as one of the most competitive in the world, or sophisticated in the world, in terms of banking systems, regulation, compliance. We have a very well-established stock market in that the market has been around for the better part of 120 years. And Elroy Dimson's book, Triumph of the Optimists, South Africa is one of the 15, I think, or 16 markets that has a history spanning more than 100 years. So I think it's probably helpful to know for anyone approaching the market from the outside for the first time that they are dealing with a sophisticated, well-regulated market in which minority rights are very well protected, governance standards are of the highest order, we've got robust reporting standards, and so on. The market itself, in terms of the number of companies that we've got listed, at the moment the Johannesburg Stock Exchange has got about 450 companies on the main board. That varies through time at very depressed environments. We found that number falling into the early 400s, late 300s, and in exceptionally buoyant times, for instance, the late 1990s, the headcount of listed companies got as high as probably, it must have got into the 700s or maybe even 800 companies. But the population of 450-odd businesses gives you a sense that this is a market with a pretty wide universe. Having said that, about 60 of the 450 companies represent 80% of the market capitalization. And those 60 companies are widely researched, well followed by in the media, on business reporting channels, on television, and investment analysts in South Africa as well as in foreign investment geographies tend to cover these top 60 with a microscope, and that causes, I think, this part of the Johannesburg Stock Exchange to be particularly well understood, and I'd venture even relatively efficient. But that leaves another 390-odd companies that are, whilst they are well run and have to satisfy all of the same reporting and accounting and compliance criteria, they are 1 degree off or 2 or 3 degrees off this line of sight or area of focus of investment analysts, which gives you what I would call almost a two-legged market that has this relatively efficient cluster of well-understood, well-researched large companies, and then a reasonably inefficient and perhaps even very inefficient cluster of second-line businesses.
Now,
perhaps another aspect of the market to recognize or to acknowledge is that given South Africa's history as a commodity-based economy or mining country, the commodity and mining businesses do make up a relatively large part of the overall market. From a headcount perspective, of those 400 companies, roughly early 200s would be industrial businesses, About another 100 would be financial and property companies, including banks, insurers, and so on. And then the balance would be commodity companies. And in every cluster, there would be businesses that are, I suppose, known to investors almost regardless of their geography. For instance, Anglo-American is a very well-established, large South African mining business. The Barclays Group, based in London, recently acquired ABSA, so we now have Barclays Africa Group, which is listed on one of the big banks listed on the Johannesburg Stock Exchange. And then in industrials, we have one of the largest emerging markets, mobile telephony businesses, MTN.